Inflation data for October revealed a relatively tame headline rate of 2.2%, mainly driven by month-over-month lower prices for gasoline and groceries. Our guest thinks that rate cutting by the Bank of Canada will continue after a pause. He reckons the economic outlook for this country is weak. We're joined by Konstantin Boehmer, Head of Fixed Income and Portfolio Manager at Mackenzie Investments. Konstantin, great to see you. Thanks very much indeed for joining us.
Great to see you again.
So has the Bank of Canada essentially succeeded in taming inflation? I mean, 2.2% headline rate doesn't sound too bad.
Yeah, I think this sounds pretty good. I mean, if I look into the details, there's nothing really that strikes me as a major reason for concern. Like the areas where things are looking a little bit hotter is still in shelter, and shelter, maybe if you break that down, the area that looks highest or hottest is in rent. Mm-hmm. That seems to be a little bit odd given what is happening in the country and the anecdotal evidence that I think we're all seeing and hearing in the newspapers of how the housing market is slowing down. But nonetheless, rent is still hot at over 5% year-over-year growth, and also on the month-over-month figure that was a 0.9, and that is a pretty big weight in the index, so that contributed a lot. And then on the negative side, I just heard it in the intro, but that's the obvious one. Gasoline prices went down. They will probably go up next month because that's how the spot market is already trading, but that is a very volatile component anyway, so we shouldn't probably read too much into that. And the other one is vegetables. I have not seen that at this supermarket, that vegetables are getting meaningfully cheaper, but if the Stats Canada is saying so, then
right. Yeah, you broke up a bit there on the audio, but I think we got the gist of it. Yeah, I know that Citi was surprised. The economists at Citi were surprised to see the strength in rents as well, given overall softness in the housing market. Are you in the camp, Konstantin, that thinks the Bank of Canada will pause the interest rate cuts in December?
Yeah, I do think they will pause. So that seems very, very likely. If I look at what is priced in by the market, there's actually no rate cuts for the next year priced, also no hikes. So it is basically just flat. Nothing is expected from the bank for the next 12 months. I don't think that's going to be the case. I see that there's weakness in several key areas of the Canadian economy, and the key areas that I'm looking at is housing. That has been a massive driver for growth over the past years to decades, and we have immigration, as we probably also all know, has come down quite aggressively, and that is another big engine that the Canadian economy had over the past few years that is stuttering. And the other big ones are natural resources. Yes, I see some signs that there's something picking up there with the government's plans, but it is not of the magnitude that can compensate for the drag that we're getting from immigration and from housing. So I think that economic prospects for Canada, unfortunately, are going to be somewhat challenged for the next few quarters, and that will likely bring Bank of Canada back into the game.
It's great to have you here to give us a pulse check on the Canadian market. You broadly like Canadian bonds. And of course, if you're seeing a soft economy, bonds are likely to do well there in the sense that inflation isn't as much of a threat. But you have some credit concerns, so you'd rather be in shorter maturities. So does that mean that for Canadian government bonds even, you see international investors maybe looking askance?
Yeah, it's not a real credit concern that I'm super worried about the Canadian credit, but in global comparison, we have to look how are countries positioned, what is their financial positioning, what are rating agencies also saying about the different countries, what is the overall credit risk profile that countries have. And I would say that over the last few years, the Canadian credit profile has deteriorated. It is still prime, still AAA. It looks good on paper. But when we're going into a somewhat more difficult economic situation, countercyclical policies, so that means spending more to support the economy to bring it back on track, that could create a negative impact on how international investors would look at Canada. And the way that that is expressed, in my view, would be through the back end of the curve. So that is a steeper yield curve. So I like a lot of things about Canada at the front end. So anything up until 10 years. And when it comes to 20-year, 30-year bonds, I'm not running away from them, but I do have we have in our portfolios an underweight position in 30-year Canadian bonds, because there is a little bit of a higher risk that the international community will demand a slightly higher premium for that.
And we're tight for time, but I'm not sure if you saw that Bloomberg story that Jeffrey Gundlach, who's a renowned bond investor in the States, telling their podcast, Odd Lots, that he thinks there's garbage lending in private debt south of the border. Do you think that people have been a little reckless or taking too much risk?
Yes, so I read that. I'm also big fan of Odd Lots podcast, so that's a regular on my list as well. I do share some of those same concerns, and it is, things can stay in a limbo state for quite some time, but as we've seen also over the past few months, there has been some companies that blew up that were perceived as reasonably decent quality just a few months prior, and then bankruptcy or at least severe downdraft in their bond prices proceeded after some weak earnings results or some revelation of some news. So I also believe that there is more of that around. The question is whether they will come to the surface and whether that is happening right here, right now. The market is somewhat fragile. The amount of news that are floating around on weak credits in the US, in the private debt market, has picked up quite a bit. So it is a fragile environment. If we get one or two more of those names popping up, there could be a sentiment change in the market around.
Thank you very much, Konstantin. Great hearing from you. That's Konstantin Boehmer, Head of Fixed Income and Portfolio Manager at Mackenzie Investments.